Welcome to FOMO Consulting for your daily AMC stock analysis video on Saturday, May 15th. Ladies and gentlemen, AMC is ready to run up fast. We are on the verge of a squeeze, I have no doubt. And as always, the apes are winning, the diamond hands are winning, and most importantly, the retail investor is winning. So if you find this video informative and entertaining, please like, share, comment, and certainly subscribe. It is a newer channel and I would certainly appreciate your support. Let's get into the video. So from the bottom of my heart, this channel crossed 1,000 subscribers last night and I cannot thank you all enough. From the first subscriber to the 1,000th and beyond, I cannot thank you enough. It is humbling. And from the bottom of my heart, thank you. Let's start with a quote. Fight the power. We got to fight the powers that be. A famous lyric from Public Enemy, performed by Chuck D. If some of you younger viewers have never heard of Public Enemy, I implore you to YouTube it. Fantastic music, very thought-provoking, and certainly relevant. We are fighting powers that want to keep us suppressed, want to keep the retail investor blind, dumb, and more importantly, under their control. We are fighting back. So let's look at the broader market from yesterday. Very, very green, a good way to end the week, very bullish and certainly needed. Dow was up 360 points, NASDAQ up 305 essentially, and the S&P was up 61. Again, a very needed bounce in recovery, and hopefully we are done with all this correction stuff. So let's look at how AMC performed. It was a fantastic day. I know some people are possibly a little disappointed we didn't squeeze yesterday, but historically, with options expiring, we have a little less volume on Fridays. There was certainly a battle for the 1250 to 13 range regarding options expiring, but overall we are holding a fantastic level near the $13 price level. I could not be more proud of this stock and where we sit going into next week. We did close at $12.98, up 1.64%. To follow up such a green day Thursday, close to 24%. To follow that up with another green day, albeit small, certainly shows the strength of the apes, the diamond hands, and the retail investor. And we certainly have help with a lot of FOMO and positive momentum. So let's look at a bigger picture here over the last 10 trading days or so. We are certainly on an uptrend, but we as well needed to somewhat cool off. The MACD, the RSI needed to kind of cool off, but I'll show you some very exciting information here very shortly, and I think we are perfectly set up going into next week. When in doubt, zoom out. So this is the weekly candles, which is a rare view. Most people don't show this. Each candle represents one trading week, but you clearly see the moving average and the bullish nature that we're heading into going into the next week and the weeks beyond. The MACD again has crossed over, bounced off the signal line. We are clearly back on an uptrend again. Exciting news. So this is the daily candles. You can clearly see we are on an uptrend as indicated by the red illustration trend line. The closer view, the MACD has clearly started its bullish crossover. RSI is in bullish territory, and the simple moving average is no doubt bullish. Very exciting going into next week. So as a quick reminder, AMC has now completed its 43 million share at the market equity offering. No doubt the days leading up to earnings, all of the red candle days, the dilution, we really weren't aware of until earnings. Clearly had an effect. We are past that now in a far more favorable environment regarding AMC and its potential growth over the coming days and weeks. So again, as a reminder, this came out yesterday. Huge piece of news. B. Riley, one of the more bullish analysts around AMC, raised their price target from $13 to $16. If you recall, a few months ago, B. Riley was also the first to step out of line with the other analyst and raised the price target from $7 to $13. So moving it $3 additional up to 16 only shows more bullish sentiment around AMC and will no doubt put more pressure on their colleagues, analysts and others to begin becoming more realistic, obviously except for the 1 cent guy. And as you can see by this trend chart, the left is May and the right is going back to February. You can see where in February there was a little bit more bullish momentum around the stock. Then the hedge funds and all the FUD and all of the hit pieces started playing into the equation in March and April, as you can see with the underperformed sell volume based on 15 to 16 analyst consensus. Now in May, we are in the strong buy to buy range. 9 out of 15 analysts are in that category. That is huge, and there are no sell ratings. So we are clearly starting to trend in a bullish direction, even from a technical analyst perspective. So here's a little piece of information you may or may not know. Do hedge funds own media? Why, yes, they do. Today, hedge funds control 1/3 of U.S. newspapers, and all 4 of the largest local newspaper chains are owned or managed by these poorly regulated financial institutions. 3/4 of the top 200 newspapers by circulation are owned or controlled by hedge funds. This was on October 1st, 2020. Watch what you read, folks. So this came out yesterday. AMC is in a secular decline as Disney and other studios bypass movie theaters. Veteran analyst. So who do you think that was? You guessed it. Our buddy Mr. Greenfield, the 1 cent per share analyst. Again, FUD. So let's look at this. This was some exciting news. This came out last night around 9 p.m. on a website I monitor. So this was a technical analyst perspective. So it reads, at this point, AMC has created a boxy, cup-like base over the last 8 weeks. That's plenty of time for a solid cup pattern to form. This pattern produces a proper buy point of 10 cents above the cup's left side peak. The left side peak, if you recall, was $14.54. So in AMC's stock case, the correct entry stands at $14.64. You want to see heavy volume on the break. Furthermore, so while AMC stock is big this week, it has to surpass $14.64 before becoming a new buy. This is from a purely technical perspective. There are many technical traders out there, including our large institutions. I have no doubt they are monitoring this. Some have drawn that line on their charts as a buy-in. So as we press upwards, and I have said many times that $14 level is extraordinarily important, and I'll show you why shortly. So you will not find this on YouTube anywhere today, I promise you. So let's read what an Williams Alligator indicator is, and I'll show you. Legendary trader Bill Williams, an early pioneer of market psychology, developed the trend following Alligator indicator, which follows the premise that financial markets and individual securities trend just 15 to 30% of the time while grinding through sideways ranges the other 70 to 85% of the time. Williams believed that individuals and institutions tend to collect most of their profits during strongly trending periods. Makes sense. So there are three trend lines on this alligator indicator. There is a blue trend line that is a 13-day smooth moving average. The teeth are the red line. That is an 8 smooth moving average. And the lips are green, and that is a 5-day smooth moving average. So obviously the lips will move faster than the jaw simply because of the weighted average over time. So reading further, the indicator applies convergence/divergence relationships to build trading signals, while the jaw making the slowest turns and the lips making the fastest turns. The lips crossing down through the other lines signals a short sale opportunity, while crossing upwards signals a buying opportunity. Williams refers to the downward cross as the alligator sleeping and the upward cross as the alligator awakening. Hang with me, guys. The alligator sleeps, quote unquote, for some time before a new awakening signal goes off, and uptrend commences with another, quote unquote, eating with an open mouth phase. So let's look at AMC. Let's see if we've got a hungry gator. Why, yes, we do. This is at the time of the baby squeeze. As you can see, the blue is the jaw, red is the teeth, green is the lips. So he opened his big old mouth right around the time of the baby squeeze. Such a violent upward event. Obviously, the moving averages are a bit behind, but you can clearly see the overall dynamics of how this works. So let's move forward. So let's look at, there is your early January. Let's look at the mid-March time frame. The alligator opened his big old mouth, and we ran up from the $7 level up to $14.54, if you recall. Let's move forward. All right, so let's start in January. Gator got hungry, right? He woke up after a long sleep, very hungry. We had the baby squeeze. Here comes late February, early March. He got hungry. We ran up to $14.54. And we are now entering the next phase of his hunger, which is in the last week or so. As you can see by the upward trend of the moving average lines, you can see the divergence. He is clearly opening his mouth. And as evidenced on the left, you can clearly see in the zoom up, we are clearly opening the divergence, and we are moving up in a bullish direction. So let's look at GME as a cross reference. You can see the massive squeeze in early January, the run up that we had a couple of months ago, and we've since pretty much been sleeping. However, if we watch this very closely over the coming days, GME may very well be waking up at the same time AMC is, which is good for us as always. So let's look on the larger scale here. You can clearly see the divergence and upward trends of the data going into the baby squeeze. Again, in late February, early March, ran up to $14.54, and we are now in yet another eating phase as indicated by the data. So again, I'm very excited over the next couple of weeks of what this will bring. So quick review of where they were to yesterday. They opened the market basically borrowing 250,000 shares. By the end of the day, they returned 5.5 million. No big deal because they've been recycling these 5 million shares for the last couple of weeks. Quick Ortex check. The short interest is at 87.55. The estimated short interest percent of free float down just a bit at 19.81, which is a good thing. Percent of free float on loan, 32.89, down about 4 points. Shares on loan went down by about 2 million to 150.45. All of this is good because they are trying to get out of their positions because they know the price is rising. Days to cover went down by 10 points, 1.64, again, indicator that they're trying to exit their positions and get out of the way. Cost to borrow is now gone down 2 points on Ortex, 20.63. Utilization is at a massive 100% as it's been for the last 2 or 3 weeks. Institutional ownership has increased substantially over the last several days. We are now up to 415 institutional buyers. Volume yesterday was extraordinarily high, 206 million. Short shares available, who knows with Fintel, and the borrow fee was broke at last view. But again, that could be updated this morning. So I showed this yesterday, brief review. What's most important is the trend lines on your left leading up to the $14.54 range. They exited their position. The data trend lines you see are the short interest trends of shares on loan, free float on loan, cost to borrow, short interest, what have you. You can see where as the price ran up, they quickly ran back down. However, they borrowed a ton of shares as that was happening simultaneously to short it back down after the stock cooled off. If you recall, when it got to the $14 level at that time, they hammered it down quick. They do not want us passing the $14 level. They borrowed more shares. They did it again a little bit when we ran up a couple of weeks ago to $12.22. But if you clearly see where the bottom right yellow arrow is, the volume bars, this is shares on loan, borrowed share volume. They are running out of firepower. That yellow bar I have indicates the highest they were able to get the volume this week, which clearly indicates they are running out of ammunition, which is why they keep recycling the same 5 million shares over and over and over. And the data trend lines of this week are now heading in a downward direction, at least for now, and that is a good sign. That means they are trying to exit their positions as they did in mid-March. So what's most important about this chart is the red line at the top. That is the line of demarcation. That is the launch pad. We crossed 14, 14.25, whatever. That is the line they clearly do not want us to cross. That is where a heavy fight will remain. I do not believe we will squeeze until we cross that line. If you look on the left, the red arrow indicates where we were around the time we got to 14.54 with a moving average. We were obviously much higher in our ascent. We are just beginning, as I just showed you with the alligator indicators. We are just starting to eat. Our runway is much longer, much higher. I believe over the next week, possibly 2, we will break the 14.54 level. No doubt. Volume needs to remain high as indicated by the yellow trend line and arrows at the bottom. Where we've had our highest volume, we have had our highest pricing. Quick reminder about when the squeeze occurs. AMC has a history of squeezing and hitting its highest price points pre-market and post-market. The highest price point in January it got to was $25.80. That was about 9:15 in the morning before market opened. So yet again on the 28th, we regained $23. That was around 6:15, 6:10 in the morning. Do not sleep late. Do not go to bed early. Do not sleep on this stock because it has a history of running up pre and post market. Monday, Tuesday are going to be, I believe, really good, healthy green days. Based on where we finished yesterday, at $12.98, we put approximately 93,000 calls in the money. That is absolutely fantastic. Some of these obviously will be exercised, some may not. No guarantee about what that's going to look like, but every time we've put this amount of calls in the money, we typically have very green Mondays. Overall options sentiment is very bullish at nearly a 3-to-1, very healthy, very encouraging, and very bullish. And as always, I have skin in the game. I win together with you and I lose together with you, and we had a great week, but the job is not done yet. We got to finish the job, folks. Let's hold strong, and I have no doubt the squeeze is right around the corner. So in honor of one of my subscribers, Walter Cronkite. Some of you younger viewers may not even know who Walter was. Walter was the face of our televisions for many, many years on the CBS Evening News. He was a wonderful proponent of the NASA space program. He was the face we watched for the Apollo 11 moon landing. No doubt Walter was a fine, fine journalist, and as I will quote him, and that's the way it is. Ladies and gentlemen, thank you so much for watching the video. I hope you found it informative and entertaining. And if you did, please like, share, certainly comment, and most importantly, subscribe. Again, it's a newer channel, and I appreciate all your support. And as always, I hope your lives remain with green candles. I'll talk to you soon. Bye-bye now.